it's getting a little wild. We have all the merge drama, and we have this kind of weird thing happening. Traders were piling out, and now they're piling back in. Ethereum regained investor support on Monday after slumping in recent days. For the past month, crypto markets have been buffeted by speculation over the potential impact of Ethereum's coming merge, a major milestone for the second largest blockchain. A key question is how the shift to a proof-of-stake system, which is supposed to be faster and more energy efficient than the current proof-of-work protocol, will affect the prices for Ethereum and related digital assets. The argument, of course, that we hear all the time is that moving to proof-of-stake will make Ethereum deflationary. But the argument from the proof of work side that I would point out is essentially that you are removing the real world cost for minting new Ethereum. So you almost have to make Ethereum deflationary, or otherwise it would lose value. Meaning that if you go from a real world tie or value to the minting of new Ethereum, and you leave that same amount of basically Ethereum creation in the process when there is no real world asset tied to it for the cost of the generation of that newly minted Ethereum, you become extremely inflationary. So by nature, for them to protect the price with the move to proof of stake, it just makes sense that you would have to make it deflationary. With the event now expected next month, the market narrative keeps twisting. According to a weekly report from the data provider Kaiko, Ether's steep price plunge on Friday brought a swift decline in open interest on derivatives, contracts that traders use to make leveraged bets on the cryptocurrency's future price. Many traders had their derivatives trades liquidated or wiped out due to margin calls, according to Kaiko. But on Monday, money flooded back into ETH futures market, Kaiko found. As the price dipped below 1,600, we observed a significant spike in open interest, he wrote. There has been plenty of movement in funding rates on Ether perpetual contracts, which are similar to futures contracts on commodities, but without expiration dates. The funding rates recovered to near neutral levels after dipping alongside the token's price. When combined with the spike in open interest we observed this morning, it seems these new positions in ETH futures are biased long and investors are bullish at these price levels, he wrote. Separately, Ether's share of the weekly combined trading volume of Ether and Bitcoin hit 57%, the highest since 2018. This trading activity exceeded the previous peak of 55% during the May 2021 crypto sell-off. The main driver of ETH trading activity in July has been increased optimism around the merge and an improvement of global risk sentiment. However, last week's sell-off across markets confirms that ETH remains a higher beta play, Kaiko wrote. There's ample speculation that many Ethereum miners might try to keep supporting a proof of work, which the blockchain currently uses, as does Bitcoin. Ethereum Classic and ETH Proof of Work, based on new theoretical fork that might take place, have been touted as a possible choice as the merge approaches. According to Kaiko, Ethereum Classic token has outperformed tokens of other forks, such as Bitcoin Cash, as well as ETH and Bitcoin, for the year to date. However, ETC recently retraced gains, falling over 20% over the past week. ETH Proof of Work's price, meanwhile, has fallen over 60% from a high of $140 at the beginning of August to around $50. The token's trading volume dropped 66% in the first week going live as traders' appetites fizzled out. While some Ethereum merge concerns, such as further delays, an unsuccessful transition and proof-of-work fork competitors remain amongst traders, Arca research analyst Nick Holtz said that most of the concerns are overblown. 3 Ethereum testnets, Robston, Sapoli, and Gorley, and 9 shadow forks have merged successfully, Holtz wrote. Many of the hiccups seen in testing arose from the fact that these tests were not the real thing, whereas the actual Ethereum merge probably would have gone smoothly. And this doesn't actually seem right. I would say it's reverse of that. Look, I don't know. I've worked in IT for a long time, and usually if your test nets and your testing environments are not going smoothly, or even if they are going smoothly, you have a higher likelihood of the actual production environment not going smoothly. It's the reverse of that. This is a weird narrative that doesn't make any sense. It's always the case that your production environment is more likely to have more issues than any of your testing environments. It just is. Once Ethereum reaches the specific total terminal difficulty or amount of computing power dedicated to the network, the merge will happen. Right now, the merge is estimated to be around September 15th. When the TTD is reached, Ethereum will switch to proof of stake regardless of any hiccups, Hotz wrote. Yes, we're moving to proof of stake. That's happening, right? The total terminal difficulty is stated. They are going to push it through. They cannot not do it at this point. And the question will be, does the network survive and how many hiccups are there post? That's the real question. Now, trading is obviously looking better. People are really bullish on the merge. And even though we're in a bear market, we have seen basically Ethereum doing pretty well. And basically now at this point too, we have a surge of 11% in staking as well. This is pretty crazy because, as you guys know, because you watch this channel, there is not going to be the ability to withdraw your stake post-merge. And so people are basically just throwing their money into a project that is not going to allow them to pull it out, which I think may end up turning into, of course, a redefining of Ethereum as a security. I think that's a possibility here, unless they get withdrawals enabled. That needs to happen. I mean, that really needed to happen with the merge, but it needs to happen shortly after. But that does bring up the issue of what happens when that goes through. Do you end up in a position where the price tanks because everybody that has their staked Ethereum pulls out and takes profits? The Ethereum network was settling below the crypto spotlight. The network's transition from proof of stake to proof of work is undoubtedly the year's event. Amidst this significant upgrade, several platforms across the industry have been extending support towards Ethereum staking. Almost every prominent exchange like Binance, Coinbase, Gemini, and others has started to support Ethereum 2.0 staking. More recently, it was revealed that the stake rate of ETH 2.0 was on the rise. As per OKLink, the number of deposit contract addresses of ETH 2.0 had reached 13,343,768. This further pushed the stake rate by 11.17%. It should also be noted that 153,000 new ETH have been staked since August. In addition to this, 36,000 ETH were added every week. Which isn't actually, that's what, 1,000 nodes a week? I don't know that 1,000 nodes a week is necessarily that high. I'm just thinking. Let me know what you guys think. The latest numbers were surprising as the network is yet to upgrade to ETH 2.0. Until then, individuals will be allowed to only trade, send, and sell the staked amount. Following the upgrade and a green signal from the Ethereum network, users will be allowed to withdraw their staked ETH. No, they won't! Stop! For the love of God, stop! We're going to bring it up again. We have proof. We have it right here. We're going to bring it up. Since you guys literally can't write articles or do any fucking research yourself, let's do it again. Right here. How will withdrawals be handled? Withdrawals will not be enabled at the merge. Withdrawals will not be enabled at the merge. Withdrawals will not be enabled at the merge. Please stop it with this narrative. It's wrong. It's completely false. And I expect better from Watcher News. I just do. Okay? Oh my goodness. At press time, ETH was trading for $1,573 with a nearly 3% drop over the last 24 hours. The merge is now just days away. I guess, 3 weeks away, something like that. Several have been optimistic about its occurrence in mid-September, and a few others, particularly ETH miners, were rooting for a delay. However, the latest developments in the network point out otherwise. It was brought to light that Ethereum 2.0 client Teku had rolled out the version 22.8.1. This is considered a prominent upgrade ahead of the merge, reportedly including the Bellatrix network upgrade and merge transition configuration. Mainnet users were urged to upgrade to this before September 6th. Mainnet nodes were required to upgrade Teku, an execution client, on the prep. Now, one of the issues that we did run into and see is that we only had a 60% participation rate in the last testnet merge. And so that is going to be the question, right? Are all of these clients going to get upgraded in time for the merge? How much breaks on Ethereum that's currently out there because people don't upgrade? You would have expected that, being the most used testnet and the final testnet to actually go through a test merge where the news is very high and everybody is fully aware of it, that you would have had a much higher percentage of nodes actually update than 60% participation. So that doesn't bode well, of course, for the final migration of the actual mainnet. I would assume, because a lot more money is on the line, that more people will be intrigued to go ahead and participate, but it is worrisome that that is the level at which it's at. Now, the question does become, of course, is Ethereum's merge priced in? Because a lot of people are expecting, including myself, are expecting ETH to continue to go up into, of course, the merge, and then probably have a nice steep incline with a successful merge. Of course, converse to that with an unsuccessful merge, a steep decline. So you're really playing the bets hardcore on that one. Me personally, and not financial advice, I would run all the way up to the merge with Ethereum, expecting it to continue to go up from here, and then probably get rid of it just because I don't want to play that 50-50 chance, right? So at the end of the day, if you're holding Ethereum through the merge, you have a 50-50 chance of it basically either going up thanks to it being successful or completely crashing down because it is unsuccessful. That's how I see it. Now, the question is, of course, still, and we're going to get into this opinion piece, is the merge priced in yet? And due to it being a bear market, I do think around that $2,000 mark is probably the priced in merge. Once again, not financial advice. That's just how I see it. I get with the deflationary that a lot of people are saying that it should be around 4,000, and I understand the math behind it. But that being said, we're still in a state of inflationary, meaning we are still in a state running up to the merge of it going up. So the impact of deflationary doesn't take effect until the actual coin is deflationary. So that's not going to happen until after the merge. So to expect the actual price discovery of that to be related to something that's not happening yet is a little ridiculous. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com, where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.